Right, morning, everybody. Thursday, the 20th of August. And yeah, we are obviously here to look into how to navigate one today and two, obviously, London. And obviously, we want to look at more importantly what has happened, and obviously why it's happened. I did quite a good PDF for you guys on bonds and, yields and obviously how it works. This is obviously the returns here, and so the Federal Reserve started obviously buying back, bonds yesterday, and so that's obviously what has crushed. Yeah, basically came out of nowhere. All right. Um, we also had the FOMC meeting minutes yesterday. So one thing to note from this is obviously yesterday, FOMC meeting minutes. I'll go over this, and obviously then we'll go over through today. So basically, as expected, the Federal Reserve are very, very hawkish, very, very, very optimistic. All right, but obviously it's the labor market which is holding things up. So if I think if the labor market was strong, they would be probably more inclined to raise interest rates. There's few of the members voted or want to obviously raise interest rates. However, majority by the looks of things want to keep them where it is. So what is what's kind of happening at the moment? We also had Trump speech yesterday, a lot of jargon, but obviously the most important thing was that that there's no current talks happening. So what are we kind of looking out for at the moment? We want to see a little bit of stability, and obviously one thing I've got to point out is euro. All right, if I go and put a say RSI on this, it's crazy. I mean, look at how overextended it is. It's extended on 2 hour, 4 hour, 8 hour, daily. So yes, yesterday was an explosive move. All right, and across all pairs here, you need to be very, very careful in regards to how you trade this. All right, because of this, huge. If you look at this on a 4 hour time frame, I think it was about 100 and we've had, yeah, about 120 pip, move to the upside with no pullbacks at all. So that is obviously very, very, uncommon for euro. Yes, it's overextended. It's due a little bit of a pullback here. Now days like this are obviously hard, because everyone's first impression is right. We're going to sell. It has to come back. It just has to, But we've obviously had, if we look at the sessions here, I mean, Asia's kind of held. London's opened up, and it's kind of tested. Asia pushed a bit past it. But obviously, if we look yesterday, London, New York, huge moves, all right, and it was like that pretty much across the board. Huge moves here. Asia has kind of tried to, make it a bit of a comeback on a few of the pairs, but obviously that's what's kind of putting me off here because, you would have to obviously want to go, long, all right, because you're not going to want to, buy the I mean, I'm actually going to swap this one and swap it to 98,500 here. You guys should always have on your DXY every 500 marked up. It just gives you that kind of, mapping outlay here. So, what am I expecting here? We've broken through. Yes, this level was tested once, twice, three, four times. five times, it's crushed through. And it hasn't just done this, slowly. All right. It's absolutely blasted through, straight from 99,500, broke straight through 99. So 99 hasn't really been tested yet. So I am kind of anticipating a little bit of a pop up into this area here. All right, 99. Um, and then yeah, that's obviously where we've got to make our, mind up. I'm a great believer of, anything we shouldn't really be trading the dollar until it reaches here. All right, because this is our kind of decision maker. Are we going to pop back up here? Are we going to pop, back up here? Now, what is gonna, hold, the dollar? At the moment, it's like trying to hold on to, water or, sand. It's just keeps on falling through. So, the two things that we're going to have to look at. One is yields here, which appear to be holding. This kind of 4.65 is holding. All right, we obviously blitzed straight down in there straight away when the news come out. It tried popping back up again. There was probably a few early buyers before it crushed back down here. Yeah, so you know, yeah, yields is looking positive that this kind of impact news that happened earlier, how we've got it. Sorry, earlier yesterday. How we've got to look at it is it's not long term, news. It's a short term impact. It's a reaction. All right. Now once yields, start to obviously, reclaim some of this ground, that is automatically going to drag the dollar up. I do think that, 99 is going to get tested. If I was to kind of play, devil's advocate here. If we come straight back down here, yes, I'll be buying from here because I don't think it should be where it is. Reason being, we've got oil up 1.1, almost 1.4% today, and climbing. Had a bit of a sideways day yesterday, but obviously we're looking to try and breach these highs. There's no like Trump plainly laid out yesterday. There is no talks of an agreement happening. However, we're all enjoying X right now. How a random tweet can come out and it's just spoiling everything. So it is. I genuinely think this year more than ever, politics have spoilt trading because it's almost like they've worked out that they can influence it and get away with it. So that's one, yeah, the thing that I'm not really enjoying about trading. So right, so with if we'd see, you've got to be, and I know I've been banging on about this, but we have to. The whole market at the moment is being dictated by yields, the dollar, and oil, and there's a huge displacement here, because the dollar is absolutely crushing. Right? Yields, yes, we've had a a sell off, but if you look at it, it's nothing major. Nothing major. You would have expected everyone's reaction from yesterday, us trading down here. That's not happened. All right. Why hasn't that happened? Because there's still demand there. Oil is still creeping higher, and obviously we marked out this 90, level here. That's the important one. All right, if oil reaches there, that is naturally going to lift the dollar up. Not through good data. It's going to lift it up through scarcity. All right, and automatically, yes, it's going to lift up yields to 2, So let's wait and see what happens here. Let's just have a quick look at the stock markets have been dying off slightly, but obviously held pretty well yesterday. SPX 500, still an increase. Everything is still trading at all-time highs. So the kind of equities market is pretty healthy. It's pretty healthy right now. So. Right, in regards to pairs that I'm looking at, there's a couple that I'm going to go through that I broke down on YouTube. One was yen, so this was obviously Euro JPY. Gave this news here. We wanted a breakout, which is what we got here. Retest, and obviously then it tapped into TP yesterday. I think I broke down Euro AUD, which come down in a bit of profit, but then obviously pushed back up again. What else have we broken down? I think GBP, JPY. Look how slow this has been. I mean, we put this out. I put this out on Tuesday. And it no Monday, I think, and it tapped on Tuesday, continued down, but obviously, shows the kind of strength of the pound at the moment. But then, interestingly enough, GBP USD hasn't been reacting as well as what Euro has. If we look at this pump up here, we've obviously had, it's not been continuing, whereas obviously Euro had this big continuation here. So let's wait and see what happens. So normally, I'd obviously get my trades out before 8. Um, I don't see a trade this morning, and obviously I'd explain it simply enough on probably on GBP USD. Let's have a look at this on a slightly higher time frame. If we're marking up here, we've got a lot of resistance here where we currently are. Yeah. All right, it's tried back previously, even if we scave this over, as soon as it breaks above, as soon as it breaks below, it comes straight back up. This bit's been a bit of a magnet here, so it's going to be quite tough to break, So if I was looking to buy, I'd want to be buying probably from down here. All right. But what you've also got to look at on the flip side, right, is if I'm buying from down here, where does the dollar have to trade into? Dollar probably for us to get there has to be, probably around this area here, right? Middle of like, yeah, probably about 99 200. Yeah. So that's kind of where it, needs to be for us to wanna kind of trade it. Now we obviously have to be bearish on the dollar probably until this 99 500's broken. All right, this is pretty easy, because yes, everyone here can, see trend, what goes up must come down, but obviously this area here has to break, for obviously trend to change, easily enough. Um, so yeah, that's we'll wait and see. But yeah, I personally feel there's a higher probability of dollar just popping up here and obviously hitting 99. As long as the yields carry on creeping higher, then I think that's obviously what we should be expecting. So let's have a quick look at what we've got on today. We have got interesting story enough. The unemployment rate for Aussie actually ticked up. So this is quite interesting because everyone else is kind of ticked down. Theirs has ticked up, and obviously that might be linked in with the some of the Chinese data. 'Cause there's I think there's there's ticked up as well. Where was it? Unemployment rate. Yeah, yeah, yeah. China's ticked up too. We've obviously had pounds dropped, US dollars dropped, or the US dropped. Euro, I think, held where it is. So yeah, it'll be quite interesting to see how kind of markets react off the back of that. And so one thing I mentioned earlier was the jobs market in the US. Yeah. All right. So today we've obviously got some jobs data expected to be getting a bit worse. Um, so let's wait and see for this data to come out. We obviously want some good data, all right? Because, lower interest rates benefit companies. If it benefits companies, it means they can borrow more to invest in their company at a cheaper price, therefore expanding, hiring more staff. Yeah. All right, so whereas if the employment, data in the US is good, they don't have to worry about that. So they can, if they want to, raise interest rates, slightly. So that's obviously why employment is, really, really important to obviously any currency. So I'm actually going to be holding off. If I was to, like I'd said, euro is 100% no go, zone. Um, Gold, I had this one laid out, but I've come out of it. I closed out in a tiny bit of profit, but I just want to hold off, because if yields do start creeping higher, if we look at gold, I don't think it'll be crazy on the relative strength index. No, it's not. Especially 2 hour, yeah, comfortable. So gold obviously had this huge move. If we look at yesterday, it was nuts. Gold yesterday moved up probably almost 2,000 pips yesterday from bottom to top, So, yes, we're obviously not going to see a huge engulf, but I do think if we get a little bit of weakness, this area might be drawn into. Do I think it's going to hit that today? No. Let's just obviously mark up. What's obviously happening. So we'll obviously mark up the previous daily high. We're going to mark up the previous daily low, even though it's a waste of time. We're going to go on the 8 hour. Asian high has tested it. It's a little bit above, so I'm going to mark this in like green. So if I mark that one in green, there's a pretty heavy wall there. And then we've obviously got the Asian low here as well. So Asian low here. So that's obviously what we're kind of looking at here at the moment. Um, you know, pro pretty active Asia. If we look at obviously Asia yesterday. Asia traded about 360 pips today. We're probably just over that. Why has my mouse run out of space? So today it's traded 480. Yeah. All right. So let's wait and see what happens. Do I think gold, could be pumping high? Yes, big, big because of the escalation. All right. But if yields hold this area and start to climb slowly, that is gonna, limit the upside on gold. So don't think that, it is gonna be busting higher. There's also if you look at on a higher time frame here, there's always a reason why price tends to slower in an area. And yeah, that's exactly why here. If we look at obviously this on a daily, there's lots of lots of support slash resistance here, so do I think we could potentially come down a little bit further? Yes, I do. I actually think potentially Asia might break and we might be trading. Let me get this one. back up. And I think we might be trading somewhere in this area today. But obviously, let's wait and see. Let's wait and see what happens here. Right, I'm going to have a look at the chat to see if we got any questions. Have we got any questions? You can ask me anything. Happy to answer. Do you guys want me to break down any specific pairs today? I'm obviously happy to if you want me to. I'll make a couple of videos up. Um, I've done quite a lot of yen recently. I think we did USD CAD, which worked out pretty well. We obviously highlighted this area here, right? And obviously wanted a break of this area here. So your entry would have actually been this one here, right? Entry would have been this. Nice one to well, approaching 1 to 2. We'll always, one thing you're going to hear me speak about a lot, because I do think it's going to help, is you want to identify, where no man's land is. All right, when you're trading, because that's going to really help you. Because then it's going to give you that kind of reason, that confidence to enter a trade. So yeah, right. Let's just have a look at the chat. Alex, should I write such unexpected news events and the reaction into my trading journal, even when it not affected my trades? Yeah, yeah, because I think everyone learned something yesterday about how the bond markets will work. Hopefully that PDF, I'm pretty sure it went through everything, so yeah, 100% ride it, because these things don't just these things don't just happen one off. They're always happening. All right, they're always happening. Let's just check my win rate, which is still, I'm not happy with it, but let me just redo. Yeah, there we go. So I yesterday, yeah, still 61%. Keeps going back to July. There we go. So 54% win rate yesterday. Not great, not happy with it. Um, I basically recovered. If I look at gold, I think it was this move. No, it was this move here. It was this move here because it was close to. I think it was close to Asia High. I think Asia High was here. I had 440 marked up, and to be honest, it popped down there nicely enough to kind of swallow my you know my my losses. I'd scaled in. Yeah, it's that was what was just a bit lucky for me. Yes, yeah, yesterday. It's been quite a messy month. Obviously, one thing that you guys have to remember as well, historically, August is always hard. All right, it's probably the hardest month to trade because it's slower. Um, when yields rise again to that level, will the Treasury intervene again? No, I don't think they will. I don't think they will too much. If we look at obviously yields kind of zoomed out, they probably are at all time highs here, but obviously they have been higher, if we look, it's only since that they first dropped below that we're kind of at like the heights of like 2007, all right, before the property crash. So yeah, I do think that that they can pump higher, and I think that is it's a really messy kind of game for everyone at the moment, because we're trying to manage everything here. We're trying to manage yields trading higher. Oil is, yeah, like I'd said, the longer this war goes on, it doesn't matter about all the rumors that you hear. If yeah, every day this war goes on, it's going to trend oil higher, and obviously then we've got this, red alert area when it hits, 90. So. Yeah, but right, I'm gonna hold this off here. Hopefully everyone's enjoyed it. And I'll probably be posting, I reckon, around. I'll be posting. Probably, I'm gonna give it about an hour. So probably about half past 9. That's when I'll step in. But no, I hope everyone has a great Thursday, and yeah, let's smash it. Have a good one, team. Have a good one.